Royce for 5 minutes.
Thank you, Mr. Chairman. I'm increasingly concerned here, and I would ask this of Mr. Gupta and Mr. Holtz-Eakin. The government actions here at both the GSEs and the FHA could, over the long term, fuel another bubble. And when I say fuel another bubble, I remember talking to the Fed in '04 and '05 about their worries, right? And I had legislation in '04 and '05 in order to regulate the GSEs for systemic risk. Unfortunately, we were not able to get that through. Now, you look at a situation with low 3% down payment requirements, where you got seller concessions that add up to about 6%, right?
Yes.
So you look at FICO scores now as low as 580. So we know from the lead up to the financial crisis that it's all gravy as long as prices continue to go up. If we could pass a law that mandates that housing prices continue to go up, there's no problem. But if you're not going to allow a system of checks and balances in the economic system, but instead you're going to step in with a government-sponsored enterprise here, and with all the moral hazard that implies, and you're going to drive a policy where we have the former FHA commissioner saying, FHA's financial condition is not where it should be yet in terms of wholesale rollback of the premiums. Here's the concern. Have we once again created a situation where individuals with no equity in their homes end up leveraged to an almost personal Ponzi scheme, with the consequences to them afterwards of losing their home, the consequences of the taxpayers dealing with another bailout, the consequences to the financial system of dealing with a shock, the consequences of the neighborhood of going through what we went through 07, 08. What's your thoughts on the end game here, Mr. Gupta, with the level of government involvement that we have here and the moral hazard that would imply?
Thank you for the question, Congressman. So going back to Dr. Rossi's statement, I do think that there is a risk here that we are putting borrowers in homes who actually might not be able to withstand that financial stress, any financial stress in the economy. If you look at FHA's own actuarial report, there are scenarios in that actuarial report which actually point to negative capital if the financial environment, if the housing and economic environment does not turn out to be the expected environment. So there is a scenario here where these prices are not sufficient, and a lack of an actuarial way of getting to these pricing, that's the risk it creates. I think from a financial system perspective, there's also a cost to it. For comparison, as a private MI company, if we were running at 1/5 of our required statutory capital, first thing, we would be in runoff. We would not be writing any business. Second thing, if we were writing any business, we would never be allowed to actually lower our prices by 40%, because part of that capital is what actually replenishes your capital to get to the statutory minimums. So yes, there is the risk of that financial burden as well as borrower burden.
And I wish you go to Dr. Holtz-Eakin, because the other aspect of this that is confusing to me, the administration says, on the one hand, the president's budget said that we needed to require more private capital in the housing system. Well, that makes sense based upon what we've been through. And this comes on the heels of cutting FHA premiums by 40%. Is there a contradiction here?
I believe so, yes. And to the earlier part of your question, I agree with what Mr. Gupta said. And if you think back to the early part of the lead into the housing bubble, we saw then HUD Secretary Andrew Cuomo cut premiums. We saw diminishment in down payments. We saw the kinds of mortgages that Ms. Gordon described, and we saw it worldwide. We now have FHA, Fannie Mae, Freddie Mac, all agencies of the federal government for all practical purposes, making exactly the kind of discretionary policy moves we saw in the lead-in. The only thing that's missing is the worldwide aspect and the exotic mortgages. But I think while it's not quantitatively the same phenomenon, it's qualitatively going in that direction, and I'm concerned.
Time expired.
You got 30 seconds.
Any other?
Well, I think it's important to say that FHA actually was the only entity that didn't get into the business of the loans without underwriting and the loans with all the predatory features. if we're, everybody here raised their hand before in answer to the question, do we think FHA has an important role?
That is true. We all
right,
agree with that.
Okay, but if FHA is to remain strong enough,
Maybe,
what you can say.
maybe the role is so important that everything should be FHA and there should be no private capital. I mean, clearly what we're debating here is where's the role of private capital to make certain there's an offset to the risk? Because clearly, based upon the government coming in with GSEs in the past, you're not going to adequately price risk in the marketplace. You're going to put a penny in the fuse box and you're going to short circuit the whole system in terms of supply and demand in this, and the consequence of it can be a huge bubble in the marketplace.
Well, sure.
That's what we don't want to see happen.
What happened
again.
during the crisis was actually the private sector wildly
Well,
mispriced
it was
risk.
because
FHA
of
mispriced
the
it
moral
least.
hazard put in there by the government. We tried to regulate against that.
Okay. Thank you, Mr. Royce. Next up, we have